Well, welcome back, everybody, to another episode of AML Conversations. My name is Joe McNamara. I'm the Director of Solutions Marketing here at AML RightSource. And today I'm super excited to be speaking with David Lutz, our Associate Director of the FCA, or the Financial Crimes Advisory Group here at AML RightSource. Now, David, I think I'd be selling you short if I just said, hey, he's our go-to crypto guy, because I know that you have your hands and certainly your thoughts in a lot of areas within our FCA program. But I really wanted to kind of take the time today to focus primarily around what we're seeing in the crypto space. As specifically, I think I kind of want to kick off this concept of, we've seen some significant movement in this space over the last 12 to 18 months. There's certainly been some policy implementations here domestically, right, as well as, a few other things that we're seeing more internationally. But from your perspective, could you just kind of set the scene for us in terms of, if I'm a cryptocurrency exchange or, a company involved in this space, what am I looking at as kind of a year in review, as well as 2026 is quickly coming up in front of us? Like, what am I anticipating as that kind of entity?
Thanks, Joe. It's good to be here. Yeah, I think, 2025 has been, a pretty tremendous growth in this space, specifically with respect to the private sector, including stablecoins. That's an industry that's grown into, a multi-billion-dollar, ecosystem. The stablecoin market specifically, it surged from $250 to $280 billion in 2025. That's up like nearly 90 to 130% year over year. And we processed, it's processed over $40 trillion in annual transaction volume, which surpasses the likes of Visa and MasterCard. And with that, you see governments are beginning to take cryptocurrency and blockchain technology, more seriously. In 2025, the more significant stride is the passing of the Genius Act. That's short for Guiding and Establishing National Innovation for U.S. Stablecoins. It's the first federal framework specifically designed for payment stablecoins, which will hopefully lead into the more broader cryptocurrency type of projects that are out there. It specifically defines digital assets backed as 1-for-1 by U.S. dollars or high quality liquid assets.
Mm-hmm.
But with that, it basically legitimizes cryptocurrency or digital asset businesses as part of the financial system, whereas previously it was looked more as, an exploratory type of area. So that's one element that I think is going to have a tremendous impact. And with that, it instills making sure that anybody that is involved in digital currency has the proper controls in place, has a proper AML KYC program, that it has, consumer protection at first hand. So that's one of the things that we've been seeing, a large growth this year. And we'll only see it, grow further into 2026.
Yeah. And I think that's an excellent point you brought up. And before we hit the big red record button, I know you and I were kind of, conversing ahead of time and thinking about this concept of almost a trade-off, right? And I love the phrase that you use where it's legitimized a ton of these digital coins, right?
Sure.
But the trade-off is obviously, hey, where it used to be a little bit more of a free-for-all, a little bit more of a wild, wild west, a great experiment has now become, well, you're going to inherit some of the more traditional, regulatory guardrails, if you will.
Correct.
I'm hesitant to say burdens, but I've certainly heard that phrase used a lot, especially within that space. But along the same lines, right? So as we're kind of looking at where the regulatory, tailwinds are taking us into 2026, one of the things that I've heard time and time again is kind of this V1 versus V2 modality that's come out of the space. And the example I'll give is very, very simplistic. I know that it's much more complex in nature. But when you think about these crypto exchanges, I think, step one was essentially identifying and going, yeah, it'd probably be a good idea for us to at least monitor these transactions that are occurring and kind of flowing through our platforms. And for a while that was enough. It was, questions would come about and say, hey, yeah, we can see it. It's all here. It's happening. But, over time, especially with passing of things like the Genius Act and some of the other, regulation across the pond, it's become more and more clear, I think, to a lot of these exchanges that, it's time to step that game up. And from a regulatory perspective, it's time to take that next step as it relates to doing more than just your what I would consider like table stakes transaction monitoring. But from your perspective and through the lens of kind of looking ahead, like what are some of the things that we've encountered either with the groups that we're currently engaged with or just more broadly in the marketplace, kind of seeing in terms of what the status quo or what the next level of those table stakes will be in 2026 and beyond for these organizations?
Definitely. Yeah. I think, the key things that are sort of leveling up, especially in like the private sector players and exchanges, is more importantly, mandatory travel rule implementation. So as of 2026, anyone in the EU or the UK have to collect travel rule data on all transactions that exceed, $1,000 or $3,000, which is going to be, a big ticket item for, any exchanges that do business in the EU. They're leveling up AML programs. They have to have really more inline expectations with that of, a banking institution. So think about, the core pillars of an effective AML program, having a designated BSA officer, having a system of internal controls, having tight KYC, know your exchange protocols in place, having appropriate licensure and ongoing monitoring similar to MSBs, as well as cybersecurity parity with, within, like that of traditional financial institutions. So I think, like, as I said earlier, legitimizing the space by setting, the bar pretty high with that of like traditional financial institutions that we see is really kind of the path ahead to grow the cryptocurrency space further. With all that, it's really protecting the customer, protecting the consumers. So that I think that's been at the forefront of all this innovation and regulation that's coming to the industry.
No doubt, right? And I think we've seen time and time again what I would consider more of the ugly underbelly of what happens when there's less regulation.
Sure.
I mean, I'll be honest with you, man. Like, I'm not Captain Regulation here. I'm not here to try and drive a stake in the ground. But having heard and worked with folks that have been directly impacted by things like rug pulls and pig butchering scams and things like that, like I think consumer protection is the best way to kind of set the table for these types of conversations. And it's also very reminiscent for me of what we saw in kind of the early days of fintechs, right? And I know we were kind of discussing this before we started here, but I can't help but feel as though these crypto players are most likely looking at how these fintechs kind of navigated the introduction of more of the traditional financial space. And again, I think we heard a lot of the same or at least very similar storylines from early fintech positioning around, hey, we're not your dad's bank, right? We're not your grandfather's financial institution. We're different. We're nimble. We're dynamic. In a lot of ways, they prove that to be accurate, but I still think that the underlying expectations associated with compliance and, again, that customer protection element certainly kind of came to roost. And so as you're looking at, and I don't mean to put you on the spot, but as you're looking at some of the current engagements or players that we're working with, where do you see that fitting into some of the discussions or at least some of the decisioning that our clients are making or going into 2026 to make?
Well, I think, some of our clients are opening their doors to the fintech space, to the digital asset, customer profile, be it, providing on-ramp, off-ramp, services or settlement services through their banking institution, but at the onset, these companies have to expect that they're going to go through, a robust due diligence process. They're going to be asked for their policies, procedures, the last independent audit. I think I've seen in a lot of cases where that's sort of a road stop for them is, or a roadblock rather, is where, if they haven't had a look like an independent audit, it's going to make it harder for them to get banking service and get a banking account. So they have to expect to have to answer those hard questions and make sure that they have documentation to back up, everything that they're saying. They can't say that we have, a policy, we have an AML I mean, anybody could create an AML program policy, but they have to back it up with, a robust system of controls, and have those tested every year, because it's important for the bank to exercise this due diligence so that they can go back to their regulators and make them feel confident that they've done, all the back end due diligence and research before onboarding these guys.
Absolutely. And, no conversation I feel like I've had this year would be complete without sprinkling in the concept of AI. It's just, it's everywhere. If you're not talking crypto or DeFi, you're talking AI. And in this case, you get all three, folks. But, one of the things, the concepts that's also kind of been floating around as I was preparing for this conversation with you is really it's not so much the introduction, right? I think we're beyond the introduction of AI, and now it's more into the optimization and some of the decisioning around how to implement, specific processes and these tools. But, given kind of from the context of, overall, people management, and through the lens of cryptos, I don't think it's a far off shot to say that, for the most part, these organizations are focused primarily on servicing their clients, and they're not necessarily as large as some of the more traditional players in again, the centralized financial space.
Yeah.
So kind of given the expected volume increase, both from what you mentioned from the overall just amount of value flowing through these, but then I would imagine too, just from a pure transaction volume, I have to assume that they're either getting hit with it now or they're preparing to be hit with, an overwhelming wave of, alerts and things that they're going to have to disposition and wade through. Obviously, we've seen, I think in my opinion, like the most credible case for utilizing AI in this space is really around, how do you augment and supplement your existing team in a meaningful way? But, in your opinion, is that right? Should we be looking at it through a different lens? What kinds of insights or conversations have our crypto clients kind of expressed to you? And certainly, what does this mean for the individual overall that's in this space?
Yeah, I think, AI is definitely, a growing space. I think over the last year or two, we've seen more implementation of AI technology, into these AML programs, more from, like, to your point, augmenting staff, but more efficiency and optimization of how they handle and triage, alert data so that they can make the best and most time efficient decisions. So we've been seeing more and more adoption of AI into these AML programs, more in like the back office operational perspective. But, notwithstanding, you still need human insights and human decisioning behind all, any AI model that you do we do decide to implement, to make sure that it's training against the proper data that we're, the large language models that are being executed through these AI frameworks are tailored to the specific profile that we have. And then we have, an appropriate governance framework, to handle AI. There's always risks of, using AI, but not making, not having the proper oversight to make sure that it's coming up with the right results that we expect. So think about, establishing AI governance frameworks, model explainability. Can't just say that, yeah, we're using ChatGPT or, Claude or any other, the Grok, whoever. we can't just put that on a blanket statement that we're leveraging it, but we have to make sure that we're explaining it. But I do see, certain crypto crypto models are incorporating AI to really, more efficiently adjudicate, wallet activity, wallet risk scoring, because it's challenging for traditional AML models to to analyze it. So
Sure.
yep.
Yeah. Well, and I think the added piece here, and I appreciate the context. I think, the other added piece in the way that it's been conveyed to me that I subscribe to is that, along the same lines of, you can't just go to your regulator and say like, hey, yeah, it's fine, right? Like Grok's got this handled, or, Fat GPT's got this handled. There's a level of transparency you got to be. There's a level of explainability that you've got to have. I think the
Exactly.
third piece of that too is really around the experience and kind of the specialization associated to those folks that are actually overseeing these programs. Like
Absolutely.
I don't think we're in a position yet, and I don't think we're anywhere close at the moment where you can just kind of flip on, one of these AI models and it soup to nuts from, A to Z kind of does everything automated. Now, I will say, I think that there's great promise back to the supplementary piece of this, or this concept of being able to take a tool and get it into the hands of a highly specialized, a highly experienced, financial compliance, professional, and they can do a heck of a lot more than obviously they'd be able to do by themselves, or that either entity would be able to do separately.
Correct.
But obviously that comes with, the need and kind of the overarching expectations that you're going to find that expertise. So again, I think just to kind of round this off, it's a fascinating space to be in at the moment, certainly as we're looking ahead into 26. Obviously those, like you mentioned, those regulatory laws go into motion pretty much across two of the major, financial hubs in the world. But I'll give you the last word, in terms of, if I'm a cryptocurrency player in this space, what's the number one thing that I should be thinking about, as we move towards the end of 2025 and certainly, into 26?
I think it's choosing the right compliance partner. For instance, AML RightSource. We've been working with, many tier one crypto exchanges over the last years. I mean, we've been in business for quite some time now. I feel like, we're pretty positioned to help, large, small exchanges, large exchanges of all different, types of profiles. We have that DeFi experience and expertise in crypto compliance. We're knowledgeable of the regulatory landscape, and we have, a managed services and human expertise to help facilitate, our clients' growth. So I think it's important to engage with a partner that's ready, and has the capabilities to facilitate your goals and objectives. So
No doubt, right? Shameless plug aside, I think
shameless plug.
no, but I think it does ring true, and obviously I'm positively biased towards AML RightSource as kind of being that player, but I think to your point, it extends to the entire partnership landscape, and being
Absolutely.
able to ensure that at the end of the day, you've got a partner that's essentially been there and done that before, that can work with you to help grow with you, rather than just service the account. So
Absolutely.
David, I really appreciate the time this morning. I'm looking forward to obviously picking things up. I know that there's a lot more that we can cover in future conversations, but
Yeah, I
again,
look
just
forward
wanted
to
to
it.
thank you for the time this morning.
Yeah, I appreciate it. Thanks, Joe.
All right. Well, we'll talk to you guys again soon. And for everybody else, thanks for listening to this episode of AML Conversations. If you want more information, whether it's about crypto or a plethora of other topics, please don't hesitate. You can find our entire resource library. It's free and open to the public at www.amlrightsource.com. Thanks, everybody.
Thanks.